All right, traders, this is going to be a very important updated price action analysis on the SPY, on the SPX, on the stock market. We are going to be going over the possibilities for tomorrow with the CPI data being released. With that being said, in terms of my trading, my portfolio is now up 55% in the past 7 trading days, and the green streak continues. My swing trade, which was up 72% right before the market closed yesterday on an FNKO put option, we went over this in yesterday's video, at the peak today was up 138%. I locked in profits when it was up a little bit over 110%. And then I did also trade straight from the watch list that I had posted yesterday, CVX. This was the second trade that was made on the day, and then I called it from here. At the peak, I was up 26%. I'd locked in profits for 10%. Shortly after I got out, those contracts were up over 40%. They printed very, very hard. Then they went back up towards my initial entry. So with that being said, the portfolio is up 4.33% on the day. Within this video, I'm going to be recapping the trades, showing you how we're able to consistently make money within the stock market, trading options using this unique gap trading strategy. We are also going to be covering the SPY, doing an in-depth market analysis, and I'm going to be explaining to you how I plan to trade the best setups at the best prices moving forward. As of now, in terms of what I'm seeing, I'm mainly seeing opportunities for the SPY, and then I'm going to be going over a couple stocks as well. Make sure you stay to the end of this video. You are going to learn so much about how these strategies work and how price action works. So towards the end, we're going to be going over the trades. Right now, I do want to go over the SPY. So in terms of the SPY, you know, the macro has been kicking in. SPY has been selling off to this 396 level. In terms of the past 2 days, it has been bottoming quite a bit towards this support level. You got a lot of support at this 396, 396. Today it ended up cracking that support, bottoming at 394.82, and then it started ripping back up to 404. So we're kind of in a micro price channel right now. Here's my theory, right? So investors were selling off the SPY, before the CPI data. So this might already be priced in my opinion. We are due for some sort of micro rally, for some sort of micro push up. And that's something that we're going to try our best to capture, because when SPY does have that little micro rally, that little micro push up like this, it's going to hit hard. And if you can get in at the right entry towards key support on the right option contracts, you can make a very lucrative return on that situation, a very lucrative return. And that's not something that you have to be right about. You know, say you thought the micro rally was coming soon. You can put in $1,000 into contracts. If you lose, 30, 40%, you lost $300, $400, then you could scale up a little bit on the next trade. You can go 1,500, then you can go 2,000, right? There's position sizing strategies. And if you're cutting your losses quickly and you're letting your wins run to an extent where your win rate doesn't even matter, it's more of like predicting volatility. And we are due for some sort of micro volatile upside move on the SPY. It's just we have to be careful, because we know for the macro, this is going lower and this is extremely bearish, and the macro has been kicking lately, and you don't want to fight that. You want to wait for a solid bullish confirmation. My theory is currently it might be priced in. I think it might be priced in. And I've remembered times where SPY was at key support levels and the CPI data came out, and then once it came, before the CPI data came out, like SPY is currently doing, it gapped up. So it closed at 399.09. It just hit 400. Now it's coming back down. So we'll see. We'll see how it reacts. I just remember in previous times when it did gap up in the pre-market, we don't know yet, but when it did gap up in the pre-market, it came crashing back down to fill the gap just like this. It gapped up, it came crashing back down to fill the gap, and then once it filled the gap, it started to have that reversal. So in terms of the opportunity that I'm seeing for the SPY, we're at this make it or break it, like 396 support and $400 resistance level. It is quite the battle. SPY is trying to form a little micro double bottom here. One thing in terms of pattern recognition that I do want to point out is it could be potentially something like this. You see how these two candlesticks are at key support and they kind of look alike right here. Same thing, two bearish candlesticks at support, they kind of look alike. And then SPY has within time a little micro rip up, a nice little micro rip up. We could see something like that. For that to really happen, SPY needs to maintain above $400. The make it or break it support level is 396. If that cracks, SPY is going to continue to drop hard for the micro. As long as we're holding 396 to $400, ideally for the bulls 398, we will be on track. We will be on track for some micro rips this week. If we can turn this $400 into support, we'll be on track for some micro rips into the 404, 405 zone. And if we can break above 404, I still think this is possible. Like I had mentioned on Monday, I do think we can still see a gap fill play to 411.34, which would be one of the best price for micro puts. So in terms of micro puts at key resistance, we're kind of waiting for that 411.34 level, right? We don't want to try to keep chasing SPY towards its 52-week lows here on the put side. I'd rather focus on stocks towards resistance like I did with CVX for a successful put option trade today. But anyways, that's where I think we currently stand with the SPY. So 396 is your make it or break it support level. The middle, we're going to call 398. And then in terms of the gap, there's going to be, if it gaps up, there's a gap to fill at 398.17. If you see it forming support around 396, 398, I think we're going to see a micro dip buying opportunity, right? So the whole theory is if this does gap up, it goes back down to fill the gap. Once it turns that into support, we can try dip buying it. If it's looking bearish and not turning it into support, then it's going to sell off and try to crack this 395, right? But if we can turn 396 to $400 into a support level, we are going to be on track for a gap fill play to 411.34. So that's my thoughts. That's my analysis on it. We really have to see how it reacts. Obviously, it's due for some sort of micro push up, but the macro is kicking in and you don't want to get stuck holding a bag like all of these investors who got greedy and didn't lock in profits on the biggest rally ever in 2020 to 2020, in that massive rally in 2020 during the pandemic, right? Now they're losing all their gains and they're paying the price. And those gains were substantial. And that was a once in a lifetime opportunity. And that typically only happens once every decade. But stocks are getting extremely low and there will be a great investing opportunity. We just got to wait things out. I still think it's a little bit too early to really be investing into stocks, right? But when I feel like the time is right, I will be using some of my money to invest into some stocks. But the vast majority of my money is mainly focused on trading because that's what I prefer and that's what works best for me. So yeah, in terms of, with that being said, our next setup is going to be EOG. So for EOG, what I want you to do is I want you to wait. I want you to wait for this to go back to 132.22. When it goes back to fill this gap above, it's going to happen within time. Whenever it happens, right? When it does go back to fill this gap right here at 132.22, play the put options, ride it back down to 123 for about a 9-point crash. That's what I want you to do on this one. It's getting a little bit interesting because we did just trigger dark blue on the squeeze. And this stock tends to sell off when it triggers dark blue on the squeeze. So if you are looking into a key breakdown play, we have to see. As you can see, this stock has a lot of support at around 117 to 118. Big upside potential, right? If we can crack this 118 level, I would be willing to play puts. A micro target is 115.60. And then if 115.60 cracks, we're looking at a very nice micro pullback to about 113. So I'm saying this because it just triggered dark blue on the squeeze, which is very bearish. We're sitting towards all-time highs, and the stock is due for some sort of micro pullback. I mean, just to show you an example, you can see right here, this is the first day it triggered dark blue on the squeeze towards key all-time high resistance, I think. Very similar situation, very similar candlestick, and it continues to sell off. So keep an eye on the key breakdown, right? That's what I want you to keep an eye on. And then also another opportunity is to wait for it to go back up to fill the gap. So resistance here, support here. If it cracks support, play the puts. We pop back to resistance, play the puts there. That's 2 trade opportunities on EOG stock. For, in terms of this micro rally, stocks are due for some sort of micro push up. It's just we got to be careful and use very special confirmations because the bears are just consistently crushing this market right now. Hence my put options printing literally every single day. I've been entering them. The entries have been spot on. The timing has been spot on. I just have to work on maximizing my wins. I have to work on letting my wins run a little bit more. That's just something I really have to work on and develop within time. But everything else has been on point. So Roblox. When Roblox can have its first green day, whenever this is going to happen, it could be a potential buying opportunity. You got to use very tight stops, though. Buying in this current market, you got to be using very tight stops. And then, you know, if you're in on a put options have been working phenomenal lately. If you're in on a put and it's going against you, you got to get out, because when this micro, you know, bullish move does hit, puts are going to take a massive hit very, very quickly. So that's something you have to be aware of and really anticipate, right? So make sure you're protecting your capital in that sense as well. But guys, I'm keeping this one very simple, very short in terms of like opportunities and plays I'm seeing right now. Those are the main ones. Those really are the main ones that I'm seeing right now. Potential key breakdown play on EOG. SPY, you just kind of got to wait to see how it reacts. So those are the main ones that I'm seeing. I'm sure tomorrow morning on the pre-market scanner, something's going to pop up with new opportunity. But in terms of stock levels right now, we kind of just got to wait and see how they react. You know, in terms of, I'm typically not trading this much. I've been trading every single day and the win streak's amazing. But in terms of opportunities right now, I think things are starting to slow down just a tad bit. Like, yeah, the volatility's here, things are amazing, but in terms of like the setups I trade, the opportunities I look for, I think things are slowing down a little bit. But we should potentially see something tomorrow. I got to wait and see. Basically what I'm telling you is, in terms of my nightly watch list, I'm not seeing anything too amazingly valuable right now heading into tomorrow, but the pre-market can change that for all of these stocks. And then the pre-market scanner with the new stocks that pop up can change that as well. So that's kind of where we're at. Just got to play it safe, wait for the proper reactions, wait for the key levels to hit that I had mentioned. But EOG, I gave out that opportunity. SPY, there's going to be some opportunity for that potentially tomorrow. I'm going to be keeping an eye on that. I'm also going to be experimenting with trading the SPX. You know, some people prefer to trade SPX. Some people prefer to trade the SPY. Some people trade both. There's actually big tax advantages to day trading SPX rather than SPY. That's something you can look into as well, where the taxes cost less in terms of locking in profits on SPX versus SPY if you're day trading it. And then in terms of other differences with the SPX, the contracts are 10 times priced higher than the SPY. So if you're someone paying commissions, going heavy on size, you have a big account, that can save you a fortune just by trading SPX. And then there is averaging your cost down strategies that people are using both on SPX and SPY. So those are just other things to look into, and it's all about preference. But that's something that I'm going to start experimenting more with as it has sparked my interest. And then last update for SPY. If we do gap down tomorrow, so if SPY does gap down tomorrow, if 399.09 reacts as a resistance level, it gaps down, it rips back up to 399, SPY is very bearish, and it's going to be on track to crack 395 tomorrow. If it pumps back up, fills the gap, reacts as a resistance, starts climbing down. So keep an eye on that. This $400 whole round number, a lot of stocks are at key whole nice round numbers right now. The macro's kicking in, but we are also due for some sort of bounce. But you could just visually see, like, Roblox just bottomed at 20. There's a lot of stocks that are at some nice key whole round numbers. So we gotta see how they react. It's make it or break it for these stocks right now. It truly is. It's make it or break it. They're at their key heavy oversold support levels with big upside. If they crack those and react as a resistance, we're going to see some nice micro downside. So just keep this in mind and be aware of the current situations. This $399.09 and $400 is the make it or break it support level for SPY. We got to see how it reacts tomorrow. That's just really where we're at. So in terms of what I'm seeing, that's what I'm seeing right now. In terms of recapping the trades, I'm going to recap these here real quick. So if we go to within the chat room of Trader Society, if you want to check it out, it's going to be the first link down below in the description. Everything is explained on that page in terms of what you get access to for a lifetime, and it's only a one-time fee. For a limited time only, you'll be grandfathered in for a lifetime. With that being said, if you go to the alerts right here, I alert my trades, all my trades real time, so students can see what it is that I'm doing in real time, right? They can go back and study the timestamps and everything and see what it is that I'm doing. But anyways, in terms of my swing trade was, FNKO. I entered these very, very early, twice today. If you watched the previous video, you're already well aware, so I'm not going to be going all over that. But in terms of why did I swing trade FNKO, the reason why I swing traded FNKO puts, so the first time I bought these puts was literally towards the top when this was in the 2160s yesterday. made a quick 30%, and then I got back in for another opportunity, and this was a swing trading opportunity this time. When it was at $20.70, I rebought the puts for the new low of day breakdown right here. And then as soon as it cracked the new low, it sold off hard. So in terms of strategy talk, you can see right here, the stock had a massive gap up. Pre-market, after hours highs was at 20, right here around 21.70. It sold off hard to 1870s. And then it ripped back up to those pre-market highs once I saw bearish confirmations come in terms of what bearish confirmations was I was looking at. I'm mainly using gap close levels, previous resistance levels, key levels on the daily, and then bearish candlesticks in terms of micro. This is a very bearish micro trend reversal candlestick. Lower highs came through right here. Once I saw these lower highs starting to crack this key level at 2170, that's where I entered the puts for that nice 30%. And then in terms of my re-entry, once it was about to snap and crack this low of day, I got in for that new low of day crack. In terms of the daily chart, what was attractive to me in terms of strategy, and this was the gap fill strategy, meaning the stock gaps up and I'm playing for it to fill the gap below right here. I'm playing put some shorting bet on the downside. I studied the pattern in terms of pattern recognition. It tends to top out at around $21. Big short time downside potential to go back down to fill the gap. Just to give you some examples right here, it got to a high of $21.06. It sold off to fill the gap right here at 1970, right? So it quickly fills the gap. Right here, it gapped up, got to a high of $20, sold off, went back down to fill the gap below pretty quickly. Right here, it got to a high of $20.65, sold off, went back to fill the gap below very quickly into the 17s to 18s. It likes to drop towards that zone rapidly. So that's what I liked about it, playing for that history to repeat itself, playing for that gap to fill below. In terms of confirmations on the daily, you can visually see every single time this stock gaps up, on the second day, it tends to spike, retest the previous day's high, and then go red, and then just really sell off hard. Let me show you what it is I'm talking about. Right here was the first day it had the massive gap up. The second day, it ripped back up towards the highs, sold off, closed red, and then on the third day, it went back down for another red day to fill the gap below. Then you can see right here, same situation. Has the gap up. On the second day, it rips back up towards the previous highs, sells off, closes red, and then the day after that, it goes lower to start to fill the gap below. Same situation right here, just slightly different. Right here, it gaps up. On the second day, it doesn't spike as high to the previous day high, but it still had a morning spike. It was still green. Then it went to green to red like it always does on the second day. It loves going green to red. After it has that gap up on the first day, then it comes crashing back down to have the first red day to fill the gap, and then the day after that is the second red day. That pattern occurred 3 times where history repeated itself. So if you're just using this same strategy, rinse and repeat, playing for history to repeat itself, that's what I like to do. Identify opportunities where history can repeat itself. Use the confirmations where it's showing that that history is going to repeat itself. If the confirmation's there, history tends to repeat itself. You identify the history, you wait for the confirmation of history repeating itself like I'm showing you how I'm doing, and then you enter that trade once you get that micro confirmation in terms of the candlesticks, right? So that was the play, that was the opportunity. And then you could see it had the big gap up. It went back towards previous highs, went even a little bit higher, and then it closed red on the day. So when it has that first red day prior to having that big gap up, history shows it likes to have another red day and attempt to fill the gap below. And it did have that other red day, and the puts did print as this sold off very hard from 2010 all the way to 1907 2 times today, and it hit 1890s. The puts printed very, very nicely, up the puts were up very, very nicely on the day. These puts at 115 to 130, I initially bought them at 50 cents, and then I rebought them on the dip at 63 cents. These printed very, very nicely today, getting to a high of 150. I got out in the 110s. They shot up all the way to 150 twice. So the opportunity was there. I made 110% plus return on that swing trade starting off the week with the Boehner. CVX was a decent setup. This was the gap fill strategy again. So my favorite setups are on the put side are the gap close reversal to fill the gap below strategy, like I've been doing on Visa last week. For those of you who watch those videos, you're well aware. This is the gap fill strategy. This is my second favorite one. The same one I just showed you with FNKO. So it's basically determining when a gap is going to fill. There's strategies you can use, there's confirmations, there's things on the daily chart, there's micro confirmations where you can use to determine if a stock is going to fill the gap. So I'm going to show you how I determined that this one was able to fill the gap. This was alerted right here. This was a very nice trade. I sold way too soon. I'm going to explain to you why I sold this one so too soon. But FNKO, I did a phenomenal job of maximizing that one. So at 11:09 a.m., I alerted these put options CVX 160 out of the money strike. I got filled on those at $2.39, and that was at 11:09 a.m. when the alert was sent out, which was right here if we go to 11:09 a.m. So why did I decide to buy puts right here when this was at $162? I'm going to explain to you why. So looking at the daily chart, this is what I wanted to bring awareness to, and we spoke about this in yesterday's video. There was a big red candle right here. And when CVX forms this big red candle, the next day, you could see right here, this is the previous closing price, this blue line. The next day it had a little morning spike. It was green on the day, and then it went red and it sold off very hard and closed the week at the lows. So I was telling myself, I'm going to look for an opportunity to buy puts for tomorrow because history shows in a situation like this, it should have a red day. See how I'm studying the patterns? See how I'm looking for the same candlesticks at key levels on the daily chart, right? So I was looking for that second red day opportunity. And you can see it wasn't too long ago, but this was in the 150s. So with that being said, in terms of how did I identify to really determine and why did I wait to buy puts all the way till here? So I was noticing in the pre-market, we were gapping up. It had the morning rip. It started to form support at 160, 160. It started to form support, it started to break out. So I stayed away from it. I waited for the back side of the move. In terms of how was I able to determine the back side of the move? You could see right here, in terms of yesterday, you had a lot of resistance. You had a lot of resistance right around here at 163.80 to 163.30. This is a key resistance zone where it sold off very hard, very quickly to $158. And we also have a gap to fill below at 159.25. There's a gap to fill below. So if history repeats itself, this stock can potentially top out at this key resistance level if we see the micro bearish confirmations. And we're also aware of the daily chart, how it likes to sell off a day after having this big red candle. And as you can see, it did sell off. This was down on the day at some point, right? So that's what I was looking at. And I told myself, you know what? I'm going to wait to see. I was looking at the 5-minute. We got key resistance right here towards 12 p.m. And that the top of that was 163.50, right? So I'm going to wait to see how it reacts towards there. If that could start to turn into resistance, then this should sell off to fill the gap below because history shows it can go green to red. So in terms of the backside move, I'm going to show you how to determine how the backside was determined in this case scenario. This is resistance with big downside potential, right? That resistance was formed from yesterday. It was also formed from today. And you can see it started breaking out, which is bullish. But if that resistance, when it breaks out, fails to turn into a support level and it starts breaking down, forming new lower highs, and let me show you when that started to occur. That started to occur right here. It cracked, it ripped back up, and then this is the confirmation that it's turning previous resistance into actual resistance again and not support, right? See how it's failing to break out and struggling? And then these are your lower highs. This is your key breakdown, right? So in this situation, what I ended up doing was, my entry was right here on this 5-minute candle. What I ended up doing was I played the key breakdown towards key resistance. So towards the upper middle of the channel. It sold off all the way to 157.81. As you can see, I sold this way too soon, man. I got an 11.09 instantly. I was up 20%. I got out for a nice little 10% win. I did have some small size where I had like 26%, but I got out of those way too soon. But I did take a fairly decent position size in this account. That's in this trade because I was fairly confident on it. The setup though wasn't the most A1, but I was confident on the trade. So one thing that led me to selling this so soon was my size. I put in like 20% plus of my portfolio. I'm trying to keep it at 10%. It's just I've been really confident lately, but I'm trying to keep it at just 10%, where I put in 10% of my account into a full A1 confidence options trading setup, and then I risk 20% of the contract, which is 2% of my portfolio, to make at least, bare minimum, at least like 40% on the contract to 100% plus. So I'm risking like 2% of my account to make 6 to 10% return on my portfolio. And with these options, you can do that. People think you have to risk a lot. I'm using options to minimize my risk. I'm putting in 10% of my account to make potentially 6 to 10% return on my portfolio. If you compound that, your results are going to be game changing. As long as you're cutting your losses quickly, you don't even need the high win rate. In terms of my biggest advantages that I've noticed, my strengths as of this year have been my entries, my timing. Those have been some of my biggest strengths. In risk management, I have an edge with risk management as well. In terms of my weakness that I'm working on, that's still in development, and I'm gaining a lot of awareness on the reasons why I'm selling too soon. My weakness as of lately has been selling too soon. Some trades I've been doing a much better job on in terms of, fully maximizing. And then other trades like this one, I did a poor job in terms of fully maximizing. One of the reasons why I did a poor job on this one is I sized in bigger than I normally would, which made me hit my daily goal a lot quicker than expected. You don't want to trade that way. Some people like will have the mindset, they're like, if I size in bigger, I can just get out quicker for a smaller win. You don't want to trade like that, because if you trade like that, that means you're going to have to cut your losses even quicker as well. You want to find a middle ground. A middle ground is what I would recommend, right? So in terms of that middle ground for me that I've been finding, I like to put in about 10% of my portfolio, and I like to risk about 20% on the contracts. And then in terms of my reward, I'm looking for a minimum 40%, 40% to 100%. But I will say, in terms of another reason why I did sell this too soon as well, is because it wasn't the most amazing best setup. I know in terms of setup and price action that I'm comfortable with, this wasn't 100% the best one. But I will say this was another great confirmation, man. Look at this. Look at this chart, man. You have a gap to fill right here at 162.50. It nearly fills the gap, has a reversal, big upside potential from 162.50 to 171. So what I tell you guys, that's an overreaction. If this key support level with big upside cracks and reacts as a resistance level, like it did here, it's gonna have a big downside move to go down to fill that gap below. You see how the inversion of that trade works? See how you can have such a phenomenal strategy, such a great trading situation if you learn how to trade puts, if you learn how to trade both ways. So many people are getting slaughtered in their long-term portfolios right now, and they're not trading. They don't know how to trade. A lot of them are going to get into trading, and they're going to lose a lot of money too, because they don't know what they're doing, and they want to get into trading because they see what happens in terms of investing. Investing is only going to change your life within decades. It's not going to change your life overnight. Just look at what happens, man. All these people who made a killing in terms of investing with these huge short-term gains, a lot of them didn't sell, and they're giving it all back. It's mainly life-changing for the long term. There is some investments where you can make phenomenal short-term returns that can change your life. It's out there, it's possible. But in terms of this current market situation that we're in, we still have to wait. We still have to wait for things to show signs of a confirmation, right? SPY's heading much lower in my opinion this year. But trading, you get in, you get out, you know your risk. I know when my trade plan, like, it's just simple. It's very simple. You get the results right away. I'm either going to lose 1-2% right away, or I'm going to make 4%, 10% right away. There's been opportunities. So fucking loud outside. I don't know if you guys can hear that. There's been opportunities. Like I was saying, there's been opportunities where on a Thursday or a Friday, these contracts go up 400%. So if you're putting in 10% of your portfolio and you make a 400% return on the contract, that's a 40% return with a risk of literally like 2 to 5%. If you're trading like same day expirations, then the risk goes up a little bit, but you minimize it by scaling back in size if you want to. But the contracts are a lot more volatile, so typically you'll lose a little bit more than 20%, like 30%, right around there. But the returns are much more exponential, so it outweighs it. If you know how to trade options and minimize your risk with it, you can truly minimize your risk with options trading. I mean, this is the game-changing opportunity. It's within the trading options and understanding how to trade them. Like, that's where the opportunity is. People aren't getting rich day trading stocks. The ones who are making money, you know, they're shorting CVX at 162 and they cover at 159. They make 3 points a share. The people who are making money doing that, they're trading thousands of shares, right? But if you have a smaller account, trading options, not penny stocks, I'm telling you, avoid penny stocks. Trading the options, understanding how they work, that's the best way you can do it. So I'm gonna leave it off at that. That was my recap on CVX. Again, another reason, this was another reason why I like this trade as well. SPY gapped up and it filled the gap. It came back down to fill the gap. It filled that gap at 11.10 and it went even lower. So I was telling myself, you know, CVX is on the backside. There's a delayed reaction with CVX right here. At 11 a.m. SPY already filled the gap at 11 a.m. You see how the charts are identical? I see this all the time where stocks have delayed reactions, where they follow the SPY within time. So in terms of confirmations, why I was expecting that gap to fill is because right here as well, you know, if you compare the SPY to CVX, if we go to CVX right here, and we compare it to SPY, you're going to see that it followed SPY very, very similar, just a slight delay. So if you see that pattern, you can take advantage of those opportunities, right? Let's go over the SPY right here. So this is the 5-minute chart. SPY gaps up, CVX gaps up, SPY tops out at 10 a.m. It fills the gap, goes lower all the way by 11 a.m. And you can see CVX did the same thing, just in a delayed fashion. CVX gapped up, it started selling off at 11 a.m. and it filled the gap right here towards 12 p.m. So there's a slight delay, but if you were to catch that, let me show you the 1-minute charts. If you were to catch this move right here, so SPY filled the gap right towards here, very, very early. Actually, it filled this gap towards this 11ish a.m. And CVX didn't fill the gap until 12 p.m. There was about an hour delay, and you could see the charts were nearly identical. So I was looking at the chart, and I was saying, this looks just like what SPY just did, except it hasn't crashed big already. So let me get in. So that's one thing I want you guys to do as well. Compare your charts to the stocks that follow SPY, compare them, and see if there's a delayed reaction. CVX, this was a delayed reaction. It was a very similar pattern to SPY, and it was a delayed reaction where SPY already crashed and CVX still had plenty of downside to fill the gap. And, you know, SPY already filled the gap, so why can't CVX fill the gap, right? So that was the situation on CVX as well in terms of confirmation. So, excuse me. So yeah, if you do want to be a part of Traders Society, that's going to be the first link down below in the description. Read the entire page, watch the short video. It's going to give you a better understanding on if this program is right for you and what's included in the program. It's lifetime access and a one-time fee for a limited time only. Within time, prices are going to go up exponentially. We've had many members get phenomenal, life-changing results. Some have scaled from 5 figures to 6 figures. We have one trader in here. He's also a moderator, G-Roar, who has scaled his account exponentially. He's now a 9-figure trader, and he's given out very valuable insight on the SPY trading channel that we just created. We now have a separate channel within the Discord chat just for SPY, for those interested in trading SPY, SPX, VIX, UVXY, stuff like that, right? So he can help assist you in that sense as well. I've mainly been doing best in terms of performance and results, trading stocks. What he does is he mainly trades the SPY. That's all he mainly trades. So yeah, we can help assist you in both areas, and we can figure out which one is going to work best for you. For me, it's been stocks, but I am trying to grow in that area as well. But I'm telling you, all you need to do is master one thing. Master one simple strategy. Stick to your trading plan. Get out at your anticipated stop loss, and then aim for that price target. Take profits along the way, right? That's really all you got to do is master that one simple thing. Compound the account, scale it, leave emotions out of the trading, right? And you can get phenomenal results trading these options. And I'm going to show you, I'm going to teach you how to trade them both ways. So you get access to the video lesson library. Within the video lesson library, you will learn how to trade the best setups at the best prices. You will learn how to find these trades, how to identify the potential, how to trade these setups, how to create your trading plan, where to get in, where to get out, where to set your price targets, right? You're going to learn all of this within Trader Society. You also get access to you know, the strategies, the gap trading strategies that's included within the price action analysis, right? And then mindset, psychology, risk management, and position sizing trading. You do also get access to the chat room where you can network with members, add them as a friend on Discord, contact them directly one-on-one, messaging. We can help assist you in that sense as well. All the channels within the chat room, including my stock analysis in real time, the pre-market preparation, the stock analysis, the watch list, I'll answer your questions as well. And of course, the real-time trade alerts where you get to see me enter and exit real time, the A1 full confidence setups only. And then one of the most valuable parts to the program is the live trading streams that I do at Market Open. At Market Open, you'll be able to watch me trade live, see my portfolios, see my open positions, see where I enter, see where I exit, see my pre-anticipated plan, see my mindset as I'm in the trade. You get to watch me trade live, right? So you get to really see how it is to trade live, and you can take advantage of that situation as well. So you get access to the chat room. There's so much more to it. If you want to check it out, it's going to be the first link down below in the description. The win streak has been crazy. The portfolio is up nearly 55% in the past 7 trading days. Now is the best time to join. I'm telling you, sometime this year, I've been thinking possibly end of June, the prices are going to go up exponentially for this program. So if you get in right now, it is a lifetime one-time fee, right? In terms of reasons why the prices are going up, it's worth so much more. It's extremely underpriced. It's worth so much more. We want a more quality over quantity approach. We're not trying to be like the biggest community in the world. We're just trying to find the right people, the high quality people who are going to be dedicated to trading this system, to trading this strategy, right? Who are result oriented, the people we're looking for, right? So it is going to be a quality over quantity approach moving forward, especially once the prices go up, and there's going to be a lot of added benefits to that as this starts to scale up. So with that being said, the opportunity is in the first link in the description. I'm going to be wrapping up this video lesson. Thank you so much for staying to the end of this video. I will see you guys tomorrow live at Market Open.